Welcome to The Week Ahead, a podcast by SPM Intelligence. I'm your host, Veronica Pana Igwe. Every Friday, we explore stories that are shaping our continent. Fuel prices in Nigeria have fluctuated sharply due to global oil market volatility, with prices changes by the Dangote Petroleum Refinery following spike in Brent crude driven by tensions involving Iran, Israel, and the United States. How would this global shock continues to affect Nigeria's domestic fuel prices and inflation? Nigerian ports recorded strong growth in 2025, with cargo rising by 24.8% to 129.3 million metric tons, driven by an increased export container traffic and a major surge in transship activities led by the Nigerian port authorities, while Lekki Port handled the largest share of cargo. What does this growth mean for Nigeria's position as a regional trade hub? Kenya's pipeline companies oversubscribed IPOs raised about 106.3 billion Kenyan shillings after the government sold a 65% stake, with parts of the proceeds set to fund major infrastructural projects, including the expansion of the Jomo Kenyatta International Airport in Nairobi. How will this investment shape Kenya's future transport and energy infrastructure? Joining us today on the podcast is Samuel Atiko, an economic analyst. He joins us for more insights on these critical stories. Welcome, Samuel, to the podcast.
Thank you so much for having me on the podcast.
It's always a pleasure. I mean, let's start with our first story where we see there's a lot of hike in the prices of fuel. I mean, it's not only Nigeria that this is happening. Other countries like the US are also facing the hike in pump prices. In Nigeria, it's just moving sharply day by day. I think right now it's going between 100 and 1,300 to 1,004. It keeps to 400. It keeps fluctuating back and forth. Now, how will this, I mean, is this going to continue? Are we going to see a reduction? Do you think we're going to go back? Prices will go back to the way they were before now? I mean, we also saw the Dangote refinery respond, so they also increased their prices. I mean, I would ask this question for many Nigerians. If we have a Dangote refinery in Nigeria and we're already producing our own fuel, why are we seeing the fuel price? I mean, the Dangote refinery, in quote, we're not importing, crude for them to process. So why is it that Nigeria, and despite what's happening in the global scene, why are we still having high prices in Nigeria? I know we still have we still have petrol that comes in that we import, but I think that the picture that we had was if we have a Dangote refinery. I know it's supposed to be government led, but I mean, we have a Dangote refinery now. So if we have a Dangote refinery, why are we still having high prices in this time? Isn't this a time when Nigerians are supposed to say, oh, we have our own refinery, we should be enjoying more reduced prices?
Well, I think finally, the argument we've made for decades had finally come to rose. We've always said that having refining capacity, having refinery has nothing to do with the price of crude.
Mm.
I mean, the price that people pay for PMS. And people have always said, oh, let's have a refinery working. The price of PMS, the price of
Yeah, yeah,
DPK will be cheap. Now we have a refinery, right?
yeah.
Is the price cheap? So I think we used to call it then. We used to call it the crude oil paradox. There are simple way in which you could actually argue out your points in public, especially given the fact that these things are far more complicated. I think I will just break it down. I think the first thing to understand is that refinery is just very similar to what you would call your oven. Refineries themselves are just ovens that you put in your kitchen. Now, if you're setting up to bake cake, you need to get in flours, you need to get in eggs, you need to get in all those things, and then the constituent price of flour, egg, butter, or is it margarine, or all those things you use for that cake is what will determine the first starting point, right? When you put it up, you have to mix it, mean that there's the labor element itself. Then you finally put it in the oven, the cost of firing it up. In fact, God help if you are using electricity for your oven. Or if you are using gas, you have to pay for that gas to fire it up and then you bring it out. And what you have outside is the price. So the key thing here is that there's a crude oil that fits into those refineries. The big question is that how much is that crude oil? If you look closely at Dangote, I mean, Dangote mentioned it himself, right? He said definitely, despite the fact that the Nigerian government is selling crude oil to him, the simple truth is that that price, that crude oil is being sold at dollar equivalent. So instead of paying dollar, they will take naira from you, but the equivalent is still dollars, right? So if the price of crude oil had gone from 60 to $100, you have to pay the naira equivalent. And when it goes into the refinery, it comes out, of course, the price will be affected. That's what you see. The only difference between what we have operating before and what we have operating now is that the pass-through effect is faster. Before, the government of Nigeria will wait, accumulate some, what you call it, subsidy, repayment, accumulate it before they begin to pass the price through to people. But now, because it's a private sector, the efficiency of the system is faster. As the price increases, you see the pump price goes up. When price goes down, hopefully, the um, the price of PMS will also come down. So I will just say this. Number one, global shocks. Anytime you see crude oil price being affected globally, it will directly affect the pump price in Nigeria, whether it's going up or it's coming down. Uh, Depending on, you can still adjust some variables. The variables you can adjust is you can decide to make the naira appreciate. So, for instance, if Dangote is exchanging 1,000 naira for $1 before, meaning that if crude oil is going for $10, you are supposed to pay 10,000. All of a sudden, the naira appreciate to, I'm just giving you hypothetically 500 naira. You could, then the price of crude oil will not go as high as it should go. So those are variables you can adjust. Now, the takeaway here again, just to mention it, is that that is why everybody, I always say it, inflation is a monetary phenomenon. Inflation, the price of goods and services that you see can be influenced by shocks that you're seeing, the war in Iran, the war between America, Israel, and Iran had created those shocks. Those shocks are just minor. I'll call it they happen rarely. But that said, many other things are happening within your economy that actually are applied to the price of goods and services. So anytime you see the price of goods and services going up, look at the government as long as there's no shock. That's the first point I want to make. The second thing I want to say is that the advantage of having domestic refining capacity is that we are not having supply scarcity. That's if some countries they start having scarcity, but we are not having that. The reason why we're not having that is because price had adjusted. If Dangote have not been able to adjust price, what will have happened is that they will start ordering crude oil, right? And that will escalate the whole issue. Then you see queues everywhere, and then the whole thing come. But now things have changed. But to your question, you are saying what will be the impact? We all know that once the price of PMS goes up, the price of transportation will follow suit. And what happens immediately is that because agricultural products are the food we eat, rely heavily on I'll call it those small, small petrol-powered vehicles to actually move them. It affects the price of food. Because again, the distribution channel around food in Nigeria is reliant on PMS. And once the price of food goes up, everybody else begin to anchor. And so I think we should expect that. It's not uncommon. If this contain and if it continues and then it's sustained, definitely the price of food will go up. And once the price of food goes up, We always say in economics, they always say when the price of food goes up, it's more like a tax on the poor. Then you begin to see the price of all in goods for small businesses start going up. Then small business energy costs, most of those businesses are powered by diesel anyway, they start going up. And then what happens is that the final consumer price also goes up. That's just, I mean, the chain is so easy to map out. It's just a clear cut case of what is going on. Simple price of PMS going up could actually cascade across the economy. So that's the third point to make. The fourth point I will make is that the real swing itself in the variables are not just Brent. We have to remember, if you, for instance, if you look at what Dangote has said, Nigeria's crude goes at $3 to $6 above the Brent because it's premium. Now, if you add the freight cost, which is about 3.5, on average, the barrel of crude oil is going for between 88 and $91. I think that's what Dangote has said. So by extension, what that means is that the price of a barrel of crude in Nigeria is averaging between 88 and 91. That's how much is getting to Dangote's refinery. So we need to keep an eye on that. And that's why we need to begin to edge and begin to pay close attention to what is happening to the global price. Once we are there, once you see Brent could go back to 100, I think today it has gone back to 100. You can do the mathematics yourself. Just add plus 3 plus 3.5 on top of it. It takes you to, that gives you an idea. And then you look at how many PMS can you extract from one barrel of crude oil. You can sit down and do the mathematics yourself, whether Dangote is cheating us or the thing is straightforward. I will just end by saying that of course we should continue to expect volatility. Um, because what we see happening in Iran, if the way Americans we call them, but let me call it like Nigerians, Iran, um, is not something, I mean, especially around the state of Hormuz, the destruction happening, I mean, the disruption happening there is a lot of things to actually, I don't think it's going to stop anytime soon, except something I will call it miraculous happen to actually ease off the tension. I think that's the first thing. Um, Essentially, the higher war risk premium is being built into the price of PMS. Refineries everywhere they are shutting down, meaning that Dangote refinery that you see, before you know it, some big men, right? The big countries will be coming after it, right? They want to get refined petrol to power their own industry. The question now comes to, will Nigeria prioritize our own domestic economy over those demands or not? So what we should expect is that once that demand start coming in, meaning that Dangote's refinery, the PMS coming out of Dangote refinery, and let's say a country, for instance, in Europe wants it, and they are ready to pay a premium over it. The question is that will Dangote, a private businessman, prioritize the Nigerian economy over that profit, or will they actually make Nigeria the anchor point? I think that's the big question to ask. So expect a very volatile band between how much we are paying now. So you see the price go to 1,000, can go to one two, you can come back to it. So expect those volatility going forward. I think I'll end by saying this once again, that when we make arguments in the past and we set unnecessary and unreasonable expectation on
Expectation.
citizens,
Yeah.
I think it's important for people to be careful what we say. And now the reality is here. We have refinery, price is going up. So the question is that why is it going up? That's the question people should be asking.
I mean, I agree with you that the volatility would continue until the issue is resolved. But I mean, also it's interesting to notice like when those demands come, for a premium where other countries are ready to pay, who would the Dangote refinery prioritize? I mean, it's a business at the end of the day. We should all remember that. Okay,
Yeah.
we will move to our second story where we see that the Nigerian port recorded a strong growth in 2025. Um, what does this mean for Nigeria? Basically, our position as a regional hub. And do you think that we're going to see an even more growth this year, 2026?
Yeah, I think it's good because we are beginning to see that pick up in the port. How will I call it? If you look at the metric tons, you're talking about almost 130 million metric tons of, I'll say it, container, right? TEU, I mean, the 2.1 million TEU coming into the country. That shows clearly that the economic activity is kicking back. Unfortunately, it's been truncated again because of what we just discussed now. But it's important to mention that when you look at the Nigerian port, we handle about, I think you mentioned it now, 130 million metric tons, right, in 2025. That's up almost 24%. That clearly shows that, yeah, raw materials and people are beginning to have more faith in the economy. And that's a very big signal. I remember then we used to look at port activity to signal whether consumer spending is improving. And once consumer spending is improving, definitely three things happen. The first thing is that how much the Nigerian government is making from ports through the what you call customs. Through custom, the custom revenue goes up. That's one. Number two, it also signals to everybody that yes, the economy is growing because the reason why the activities in the ports are going up is because people are demanding for more raw material, for more spare parts, for more consumer goods to sell in the economy. And that's a positive thing. But it's important to also mention that after COVID, we see the tumbling and then the collapse of the Naira. Those port authority actually started falling down significantly to the point whereby that 130 million that we are celebrating tons, South Africa is doing about 221, and they have a relatively smaller economy than Nigeria. I mean, population-wise, they have a smaller population compared to Nigeria. So the what we celebrate in our port is 129. South Africa is doing 221. Egypt is doing about 210. And these people don't have as big a population as Nigeria. If you look at Ghana relative to their population, they are doing about 26 million tons, right, in their port. I think if you look at the figures for 2023, it's about 26 million pounds. If you try to normalize to make it comparable to Nigeria, you see that they are still doing better than we are doing. So it's not yet ururu to use that word loosely. I don't like using it. We still need to do a whole lot of work. It signals that things are improving, but a lot of work needs to be done to actually get the Nigerian economy back on its foot. I think that's the first thing. I think the transmission source, just to mention that again, shows clearly that, yeah, things are happening in the economy, which is positive. We also need to look at where the activity is happening. It used to happen in the Apapa port, the Lagos port itself, the whole Lagos port. Now it's going to Lekki port, which is positive. Um, that's a positive one, meaning that cargoes are actually shifting and moving towards the Lekki port, which is essentially what we want to do. I mean, 40%, I think 40.6% of activities now seems to be happening in the Apapa Lekki port, right? It's also important to mention that, this argument has always been there that, 99% of all port activities in Nigeria happen in Lagos. But if you look closely at the data, you see that the Port Harcourt, the Horn port, is actually accounting for about 19.1%, more bigger than the Apapa port, which shows clearly that we're beginning to diversify where we actually bring our goods through. I mean, our goods enter into the country. I think those are positives for me. I will say yes, what you have said is positive, but we have to remember that some of the money powering this input that is dragging this money is still petrodollars. It's because Nigeria is getting itself back on its feet. Can it be sustained? That's one. The second thing to mention is that we've seen that the Lekki port, there's a proof of concept there that you can have a mega vessel capacity, and then that could technically enhance and make your economy be. I mean, Lekki is now doing 40% of our port activity. So if we go build another port, maybe somewhere in a delta or something, we could also have a lot of activity. So there are business opportunities to begin to expand our port. We always understand again that the maritime multiplier effect, when you see goods coming into the country, I'm just summarizing what I've said before. When goods start rolling into your country, it's a good signal that something positive is happening in the economy. It could have positive effect on our fiscal actions. Customer revenue goes up, and then also businesses will begin to create jobs, and then we begin to see things around warehousing begin to kick off. Overall, I think the biggest thing we should take a close, I mean, we should keep our eye on is the African Continental Free Trade Agreement. On one side, we need to hold it in our hands. We need to now remember that we can now export goods to China, duty free. That's also something to hold in our hands. The big question we should ask ourselves is that for how, I mean, when will Nigeria begin to, I mean, most containers that come to Nigeria just bring in goods and then they leave empty. So when do we reverse the trend and begin to put in goods also into some of those containers and send it to the world? I think that's the big policy question we need to be asked, especially for the economic planners.
I mean, I agree with you as well. When can we fill those containers and also have our goods, in different stores, different homes around the world as well? On to our final story where we are discussing Kenya's pipeline companies IPO, where they were able to raise quite a number of Kenyan shillings. And um, part of the proceeds are being set to fund major projects, and we're seeing they're focusing on expanding the Jomo Kenyatta International Airport. How do you think that these investments will better shape the future for Kenya as well? And they are putting this money into infrastructure and energy as well. So they're doing transport and energy infrastructure. They've been able to raise about 106.3 billion Kenyan shillings. Really, really interesting. I mean, it just shows how governments are trying to, raise funding as well. But I think that most importantly is what is one thing to raise funds is another to ensure that those funds are used efficiently, right? That, the infrastructure is really, really put in place. So, like, how do you think that these investments will shape the Kenyan?
I remember some few years ago I was reading a book written by I can't remember his name now. He wrote about the unending search for monetary salvation. It's a funny book to read. I think Kenya is showing us clearly, and we've always argued this in the past, that you don't have to borrow money to fix your infrastructure. You just have to be creative about it. The whole construct around financial engineering is what you see in full display. First, escaping that sovereign debt trap. Nigeria now we have a dam. I always anchor on Nigeria. Nigeria has about 100 trillion naira in debt. The question is that can we package that debt and then look at the airport, for instance, that is being built in Lagos? Can we take the cost of that airport and assume, bring in a valuer, right? A real estate or what you call appraisers, and then let them look at the value of that airport and then bind it together with some of those liability. Let's assume the Lagos airport associated is actually what in terms of its income. Of course, the income to the EPS, the earnings to share. I mean, the share to earning ratio, the earnings to share ratio, depending on how you want to flip it. Um, you could decide to use that as a way of actually reducing your debt stock, right? So you could take a 1 trillion naira and then you bind an asset that is generating income with it and then you let it off. So that's essentially what you see playing out there in Kenya. So it's a very good strategy. So don't let's look at it as an IPO. We are more like looking at it from the perspective of how to actually escape the sovereign debt trap. But we need to understand that there are some policies that have happened in Kenya before they got to this point. The first thing they did was to drop requirement for Africans coming into Kenya to begin to go through this hard process of paying money and applying for visa, making it extremely very easy for Africans to travel to Kenya. If you're traveling to Kenya as an African, you don't need a visa. You could just walk in there at the point of entry, they stamp your visa, you walk. It's not different from you traveling to Ghana. That's the first starting point. So there was a proof of concept when they introduced this sometimes last year. I think it was around this time last year that they announced it. And they used that to model up how many people will come into Kenya. And what we've seen is that proportion of Africans going to Kenya for holidays had increased significantly and to the point whereby they can now conveniently say we need to expand our airports and they could build a financial model around that airport to sell to investors. Um, I think this is a big lesson for states in Nigeria And we've written about this in the past around how you can be very creative in how you raise funds and how you address a whole lot of issues. I've always said it. I mean, a good example is that aside from Abuja, which happens to be, I'll call it the city that Nigerians actually be, there are no cities in Nigeria, there are no mini towns in Nigeria that you can be proud of, right? How about beginning that process of building real estate and then packaging it up and then trying to sell it off to investors? And you understand. So we need to be creative about it. I think that's the big takeaway from this piece of financial wizardry, to use the word loosely. I think that's the first thing to say. The second thing to also make up is that if you look at the pipeline component itself that they are building into this, about 2 billion, if I recall, you mentioned about that they're channeling about 2 billion shillings from their energy assets to fix our aviation infrastructure. So I think that's a master stroke. What works can actually be anchored to fix what is not working and what you need for the future. So it's a way of diversifying the economy. I know people say, oh, government have no business in government, but if you see some of the most efficiently run assets in Nigeria, for instance, the LLNG, the liquefied natural gas assets in Nigeria, rather than selling it off. I remember the president of Nigeria was talking about selling them off. We could take some lessons from Kenya. Rather than sell it off, why not sell 65% of our assets like that to the public, listing it on the stock exchange, making assets available to people, and then deviating and then building in some things you need to fix to diversify your economy into that mix. I mean, yeah, that's another way to think about it. The third thing I want to see is the concept of democratizing infrastructure itself. If you look at the fintech platforms and then the revitalization of the national assets itself, and the whole thing they did around the heavy participation of retail investment in the whole thing itself is also very, and then creating something that look like M-Pesa, right? M-Pesa, and so I don't want to talk too much about this. I think it's a big lesson for us in Africa to actually take a lessons from this on how they've been able to package up this I'll call it the asset monetization playbook, which they've used, and it's been used in the past. In the US, if you go to the US, they used to package assets together, which they call the bringing mortgage together, and they securitize it and then they sell it. So securitizing infrastructure and packaging it other things and then selling it off to investor could just be the way to go rather than fixating around borrowings and borrowings and borrowings unending, I'll call it the unending search for monetary salvation. I think I'll end by saying that um, this is actually something that the whole of Africa, whether it's Uganda, whether it's Nigeria, I mean, we need to take a big lessons from this, and then we need to begin to see some of these creative assets come on board. If we can fix this, of course, the Nigerian stock market itself, the capital market will be strengthened. The Nigerian bank that is heavily reliant on borrowing a few people money will now begin to diversify, of course, their asset base. And once you do that, they become more LDR. And then with that, the whole concept of having this volatile exchange rate begins to whittle out. And then that's how you build a very sustainable economy. I think that's the pathway to go for us. And I'm happy that finally we have a test case and we have a case study to actually show policy makers in Nigeria that this has worked. Historically, we've always told them about this. They've always ignored it as something that cannot happen. But now that Kenya is implementing it, we have a case in we have a case in time that we can use to actually and showcase to government to see this works. Why not try do it rather than borrowing arbitrarily without having any income source to back what you're borrowing?
I agree with you that this option should be looked out by the Nigerian government as well. Thank you very much, Samuel, for joining us on this episode. It's always lovely. I mean, how you broke down the concept of the refineries and how we thought it was a salvation kind of to our rescue, and now how we're getting the reality check that it's not with the increase of fuel prices. But thank you very much for being on the podcast. It's always a pleasure.
Thank you always for having me on the podcast. Always a pleasure. Yeah.
To all our listeners, this podcast is by SBM Intelligence. You can access our podcast by searching for SBM Intelligence anywhere you find podcasts. Don't forget to subscribe if you're yet to. Ensure that you like, you share with a friend, and you drop your comments in the comment section. For deeper insights into our work, you can visit our website at sbmintel.com. Remember to connect with us on all our social media platforms. You can find us on X, Facebook, Blue Sky, and LinkedIn at SBM Intelligence. Thank you for tuning into the week ahead. Join us next Friday for more updates that are shaping the African continent.